Hello, I'm Douglas Brodie. I'm the lead fund manager on the Edinburgh Worldwide Investment Trust here at Baillie Gifford. Thank you very much for joining me today. I was going to split today's webcast up into three sections. A little bit about what we seek to offer through Edinburgh Worldwide, some reflections upon what's been a very unusual year for us all, and a little bit of a portfolio update, what we as the managers have been up to. So in managing Edinburgh Worldwide, we seek out companies that are out there solving some big globally relevant problems. And I think the diversity of that problem solving approach really comes through when you look at the portfolio. It's all the way from companies solving problems in terms of how we treat disease, how we travel, how we educate. It's really, really diverse. And we follow that approach as the progress that results from these companies' problem solving endeavours can be substantial, both in terms of the wider sort of financial implications through share price appreciation, but also in the sense that these companies tend to drive innovation. They tend to move the world forward, ultimately to a better place. And I think as the frontiers of innovation and problem solving continue to broaden and deepen, we are really encouraged to find maybe a growth in both the opportunity and I think the relevance of that type of investing. Now, in seeking out these companies that we feel can really make a difference, we point our idea generation lower down the market capitalization scale. And the reason for that is really twofold. Firstly, the traits that we believe are most commonly associated with propelling companies on a path to greatness do seem to be most associated with younger, highly ambitious, smaller companies. And by that I mean their entrepreneurial tenacity, their willingness to experiment, their often founder-led drive. Now, to be clear, such traits are not exclusive to smaller companies, but I think their relevance and their impact can often count for so much more if allowed to flourish outside of those constraints of bureaucracy and a larger company mindset. And secondly, to really unlock that power of investing, that compounding effect that's so important, we think it's important to identify these early businesses when they are young, when they are early on their evolutionary path. Now, we aspire to own these young businesses as they develop, as they live up to that potential and as they ultimately thrive. And in that regard, we think it's important to retain ownership of these businesses as they grow and as they develop. Now, some of the companies that we own have started to deliver upon that. They can no longer be conventionally labelled as small. However, we believe in many ways they retain the attributes that initially attracted us to them. Moreover, these attributes can now synergize with a degree of operational progress, perhaps even commercial clout. They may not be small, but they are still immature to where we believe they can ultimately get to, and early success on that journey makes us more confident that they can go from being good businesses, good investments, to truly great businesses and great investments. So as we reflect upon 2020, it's clearly been a staggering turn of events for us all. But really what stands out to us most is just the underlying adaptability on so many levels. Enforced adaptation by individuals, by institutions, by business, by society, and really how technology and human endeavour have come together to create a path forward. And I think that the lessons from previous crises have suggested that constraints ultimately do breed a resourcefulness, a degree of ingenuity, and I think COVID will ultimately prove to be similar. Now, in its simplest form, it encourages an adaptability at the individual level, maybe an openness to experiment with new practices, new ways of doing things, a sort of melting away of embedded skepticism and inertia. But it also ultimately provides that fuel to the innovators, to the entrepreneurs to build for the future. And our growing sense is that this adaptation will underpin an acceleration in the rate of change in many aspects of our lives. Now, I'm sure we've all witnessed some of the immediate adaptations required, the surging e-commerce orders, or the use of digital forms for delivering healthcare and education or entertainment. Now, some of that will undoubtedly normalise, but in many cases, it really will just whet that appetite amongst both consumers and businesses as to what is now possible. And although maybe stock market behaviour, indeed the performance of the trust over the past year, might suggest that some of that acceleration is increasingly anticipated, our greater sense is that this isn't merely about a sort of growth rates being faster for a little bit. It's potentially much, much deeper than that. And maybe the more profound dynamic at work here is that digital first business models will increasingly prevail. They will become the norm. And I think that has real important implications around competitive dynamics, because in that digital world, first mover advantage, reinforcing network effects, they tend to be so important. Now the upshot of that is that the spoils of success will just accrue at a faster rate to a smaller number of companies. And we see our challenge about trying to identify those companies best positioned to exploit that and really become the winners of the future. And that's a challenge that we relish. Now, turning to the performance of the trust and the underlying portfolio, I'm pleased to report that the trust's holdings have performed strongly in aggregate over the course of the year to October 2020. The net asset value of the trust increased by 57.8% over that year. The comparative index, the Standard & Poor's Global Smaller Companies Index, increased by 0.4% in sterling terms. Now, the most significant contributor to performance in that time came from the long-standing position in Tesla, the electric vehicle company, and really there through broadening its manufacturing footprint, through expanding its product range, a real sort of widening of the competitive gap on numerous fronts. Tesla really continues to capitalize on its initial status as a strong technology-powered disruptor in truly vast end markets. Now, with ongoing battery technology advancements, autonomous driving developments, and combine that with now just the pure manufacturing scale that Tesla is building, we think this is a company that can build on its strengths and build on its differentiation for the future. And maybe as we reflect just the consequences of decades worth of over-reliance upon fossil fuels being burnt as that dominant source of energy, maybe that's probably the most daunting challenge facing the world is how innovators and entrepreneurs tackle that problem. And while still early, I think, in that response, it's encouraging in a sense of more optimism when you see the likes of Tesla make progress, or indeed more close to home here in the UK, a fuel cell company called Ceres Power, which has been another strong performer in the area of fuel cells and made a notable contribution to the portfolio. And again, the robust contribution to performance from holdings such as Ocado in online grocery, Teladoc in telemedicine, Chegg in online education, Zillow is a leading online property portal in the US. I think this really speaks to the ascendancy of these digital platforms in the current environment. And as I hinted earlier, it must be expected that some of the immediate operational strength of these companies stems from just almost an unnatural level of demand. And therefore you might expect some of that to moderate. But the lasting impact here is that these services will go from being sort of perceived as alternatives to a much more scalable, more future-proofed way forward. And increasingly, I think many of these businesses represent a better and a cheaper way of doing things. And if you can get that combination right, that can be phenomenally powerful. We added 15 new holdings to the trust over the current year. Companies at the forefront of driving change in a real wide range of areas, all the way from helping companies understand their data, to helping lenders cope with the digital age, tools for scientists to help them develop cutting-edge therapies. And I would encourage you, if you want to know more about the additions, to read the write-ups in the interim reports and the annual report, where we explore these companies in a bit more detail, and that can be found on the website. And following on from the purchase of unlisted UK chip designer Graphcore and US gaming company Epic earlier in the year, the trust now owns 9 unlisted companies at the end of October. And over the year, we also added to the unlisted positions in SpaceX, Reaction Engines and Oxford Nanopore. So to conclude, we are acutely aware that many individuals, many businesses, indeed society at large, will bear a huge cost of the current pandemic, and that will reverberate for many years. The companies that we invest in are clearly not perfectly cocooned from that backdrop. They cannot be. However, EWIT's portfolio is markedly skewed towards companies that offer structural growth, a sort of disruption of incumbents, or strong taking of market share in dynamic end markets. And we feel that those combinations are much more powerful and really offset the economic headwinds that may be out there. And that view comes from an experience of investing in the most interesting, innovative, smaller businesses over many years, and really the observation that they tend to live or die by their own actions and their own progress, rather than being held hostage to the economy at large. And as observers along frontiers of innovation in a real wide range of industries and applications, we continue to be really excited by the opportunities that abound. Consequently, we feel that the approach that we pursue with Edinburgh Worldwide is as relevant as it's ever been. Again, thank you for your interest and goodbye.